Hold up.
Hey guys, hope you are all having a great day so far. Big news coming directly from GameStop today, and they are not good. Superstonk and other YouTubers will try to convince you this is a 4D chess play, and I won't rule that out of the realm of possibility by the way, but that solely relies on assumptions lacking evidence. If you didn't know yet, GameStop disclosed that it has now entered into an open market sales agreement with Jefferies to offer and sell up to 45 million shares. GameStop intends to use the net proceeds of the offering for general corporate purposes, which may include acquisitions or the more likely venture investments, in a manner that is consistent with their investment policy. As of note, GameStop has an outstanding share count of 306 million shares. In the filing, GameStop actually disclosed that the market price does not trade according to the underlying fundamentals of their business, which is actually really interesting and something we will discuss in detail. If you guys haven't already, please help me boost the outreach of this video by liking it and dropping a comment below, and if you haven't already, there's no better place to be than my Discord, so come join us, it's free and we have all types of content for you guys. So, the first portion of this video is us having a realistic talk about the fundamentals about GameStop. This isn't about MOAS or market manipulation, this is purely based on how the business itself is operating. Over the past couple of earning reports and along months dating back to summer of last year, I have been telling you guys that although GameStop might become profitable by Wall Street metric standards, the business is looking extremely rough. They have done an amazing job at cutting costs, but their sales are rapidly declining amid a change in how people consume products. The video game landscape has changed a lot in the past 10 years, and consumers now prefer to download their video games or sign up for subscription-based services like Game Pass in order to access a catalog of games. People are voting with their wallets to not buy physical discs anymore, and according to leakers, console manufacturers are looking to make next-generation consoles without discs as well. Because of this change in the prospect of how the future is shaping up to be, GameStop's business model is inadequate, and its latest preliminary report shows that all those warning signs that I told you guys are coming to fruition. GameStop needs sales, it is the most important metric for the company at the moment. Though cutting costs has helped it, its inability to find new strong sources of revenue are going to start affecting operations significantly. According to their latest filing, GameStop said it expects its first quarter net loss to range from $27 million to $37 million, which is narrower than the loss of $50.5 million posted in the year earlier quarter. Sales are expected to range from $872 million to $892 million, which is a huge decrease from a year ago when they reported $1.2 billion. The company also said they expect to end the quarter with cash somewhere between $1.07 billion and $1.09 billion, which is down from the $1.3 billion a year ago. As you guys can see, the sales decrease is devastating, there is no way to call that otherwise. Yes, their administrative costs went down around $300 million, which is an improvement over a year ago when it was $345 million, but again, GameStop's decrease in doing business is growing so rapidly that of course their costs are going to continue shrinking. Let me say it again, GameStop sales dropped 30%, and their forward guidance for their next quarter is pessimistic, further exemplifying that what I am telling you isn't just an opinion, but also a concerned warning from the company itself. One interesting point is that $217 million was clearly used for something. We know GameStop isn't having huge operating losses that would have forced them to use that amount to make up for sales or an expense, so it begs to question, what did Ryan Cohen and the board decide to do with that amount? It could be that they decided to finally invest some of it in the market. There is a crap ton of speculation, this time with backed evidence, suggesting that there was a share buyback. We won't know for sure until next week however, and this is where the filing to sell 45 million shares comes in. So, as typically seen when companies struggle but still have strong volume derived from shareholders, they will turn to that if it means they can raise cash, and that is the case with GameStop as things appear to be. I am reading directly from the prospectus directly from GameStop. It says, and I quote, "We may offer and sell, from time to time, one or any combination of the securities we describe in this prospectus. The preferred stock, depository shares, warrants, purchase contracts, units and subscription rights may be convertible into or exercisable or exchangeable for our common stock, our preferred stock or our other securities." That is a lot of different types of securities. Many are speculating that this could be in the works with GameStop planning to make an acquisition that they have yet to announce. There is also a real probability that we could see a stock merger in the future. Or it could also mean that the company is concerned about its potential for future sales and decided that this was the best course of action. Again, your guess is as good as anybody's and we won't know for sure until next week. What happened today? View it as a notification of the intent of what GameStop plans to do rather than a laid-down plan entailing their next move as a business. In my opinion, this gives GameStop a lot of leeway in future squeezes. They could use a future squeeze to sell Class A shares and make a lot of money on the rally. We know GameStop is going to have rallies and squeezes in the future. We know the stock is heavily manipulated and prone for outbursts given a constant reduction of people registering shares out of exchanges. In fact, in the same prospectus, GameStop seems to hint at this being a potential reason for the move. In fact, a portion of a paragraph reads, and I quote, "Furthermore, since January 20, 21 through the date hereof, the market price of our common stock has seen extreme price fluctuation that does not appear to be based on the underlying fundamentals of our business or results of operations." Now, granted, this was followed up with a direct warning to investors that purchase the shares of their common stock in the offering given the change for significant losses. However, the fact they mentioned that and dated 2021 is really interesting. This could certainly be the reason why. Maybe GameStop expects another rally to follow in the next 3 months and they want to ensure being able to sell shares to raise money. Now, obviously, I am not a fan of this as this is what AMC has done similarly. This is not good for shareholders overall, and to be frank, if the intent of selling shares on a rally are indeed the plans of GameStop, it makes me very uncomfortable that this might be a sign of what the company is looking to do to derive profits. Again, their business model is failing, and I would prefer stronger leadership on that end rather than reverting to using pumps as a goal to make money. I want a solid pivot to a new business model and venture, not for GameStop to start selling shares to make money. I know I will be called a shill for that. I know it's not a popular thing to say, but it's how I feel. If this is all a plot to make an acquisition, however, then I will most likely be at total peace and even fully back it. For the billionth time, we won't know more until next week when more details are disclosed. We are not going to jump the gun and call this good or bad ahead without knowing concrete details. We are simply pointing out the most likely possibilities. This is a shelf offering. It does not mean GameStop has already sold stock. If you guys think I am missing something, let me know in the comments and I will make an update on my next video. All this information was dropped today and there's a lot of points being made. Overall, at face value, what came out today wasn't good for GameStop at a fundamental level. The 45 million share shelf offering is still a question mark given we don't know the endgame of it, but at face value it also isn't that great at the moment as we lack information. I continue to say this, I want stronger leadership from GameStop. It is time to pivot away from video game sales and start taking risks. Sales falling 30% is a red alarm and a serious concern, and GameStop must do better. Their silence about their plans is also worrying to me, as it is for many, even if many don't like to admit it. We want strong guidance, a well-thought-out plan of where the company is heading, so that we can have an idea of what the future for the company holds. Yes, this is not concerning MOAS, and what happened today regarding their weakening business does not change anything about the short seller thesis. Clearly, as I have pointed out, there is a strong bias in the market to destroy this company, and they are not allowing retail investors to give it the value we think it deserves. In my next video, I will detail one of the most vicious techniques they used this week to beat demand, something I haven't seen anyone talking about, so I am excited to bring that up again. As always, thank you so much for watching the video. Leave a comment down below, join my Discord pinned in the comment below or the video description, and I hope to see you guys on the next one. To the moon.